Well, November was a record month for U.S. stocks. The post-election rally pushed the market to several all-time high levels. But despite these new records, not all stocks were joining in on the party. In this morning's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins Business Courier editor Rob Dahlmeyer in the studio to talk about why the market was favorable for some stocks, but not so much for others. Mike and Rob.
Peg, thank you. Mike, thanks for being here. Obviously, before the election, there was some doubt as to what would happen with the market, depending on who won the election. But it's been a great November.
November, yes, as Peg said, several record highs, so a good month. But important to remember what we're talking about when we say record high levels. What we're referring to are the market indexes reaching all-time highs, and a market index being a collection of individual stocks. So the Dow Industrial Average, for instance, has 30 stocks within it. The S&P 500 naturally has 500 stocks. And so it's these indexes that are hitting all-time high levels. But of course, it's possible for the index to be at an all-time high, but the stocks within it to not necessarily be at the high. So that's what we're talking about for November. Often when you have a rally, it's sort of a broad-based, all stocks are rising. You hear the phrase, a rising tide lifts all boats.
Right.
Well, that's not what we had in November. It was a very uneven rally where we had some very clear winners, but then some, as Peg said, not so much.
So which industries, who were the winners?
Well, that's easy, actually. Hands down, it was the financial companies, far and away.
Well, good on you.
Well, there you have it. So, you know, to put that in perspective a little bit, if we measure how the market did by the S&P 500, it gained about 3.5% in November, which any way you slice it is a pretty good month. If we single out just the financial stocks, they gained 14% for the month. Wow. So yeah, that'd be a good year.
Sure.
But in 4 weeks is amazing. So some other sectors did well also. Industrials did well. Oil stocks did well. But the key to the rally, far and away, was the performance of those financials.
Yeah. But all the ships didn't rise. So who were some that didn't really have a great month?
Exactly. So in fact, while again the index was hitting that all-time high, there were two sectors of the index that were actually going in the opposite direction. So utilities, electric utilities, and consumer staples stocks, so foods, beverages, soft goods, these were actually negative for November. So you know, staples were hurt by a rising dollar, utilities hurt by rising interest rates. So it was really just a unique month in November. The best performing sector gained 14%. The worst performing sector lost 5%. So that's a 20 percentage point gap between the best and the worst performing.
That's huge for 1 month.
That is. That's unheard of.
Yeah, so, I know Kroger's facing food deflation right now, so they're not. You're right on with that one. So, but anyway, thank you very much for being here, and we'll see what happens in December.
Sounds good.